Hello everyone, and today we'll be talking about two companies that seem to have a good potential ahead based on their recent findings. So the first one is a global travel tech SaaS player which has unveiled the industry's first AI-powered model context protocol integration, and the second one is a premium auto retailer which is expanding its footprint in a new Mahindra showroom in Hyderabad and an extended Citroën business in Delhi. So together, these moves highlight how AI-driven travel solutions and fast-evolving auto retail strategies are shaping the new growth frontiers across technology and consumer markets. So welcome to another episode of Noisemaker, where we keep things simple and talk about companies that may not always come in the spotlight, but they have a strong potential for future. I am Saizal Agarwal, Equity Research Analyst at Desvelado Advisory, and today we'll be talking about two companies that are making solid progress in their business. And if current trends continue, they might keep growing even further. But before that, here is a quick disclaimer. So any discussion, facts or writings provided here are for informational purposes only and do not constitute any buy or sell recommendation. So please conduct your own due diligence before making any investment decision. Now let's move to the first company, which is Rategain Travel Technologies Limited, which is a travel and hospitality SaaS company providing distribution, pricing, customer experience solution to hotels, airlines, online travel agencies, cruise lines, and other travel service providers worldwide. And recently, the company launched the hospitality industry first model context protocol (MCP) integration for its booking engine, enabling seamless conversational bookings through Claude and other AI assistant. And this innovation, part of the UNO platform, makes hotels both AI discoverable and AI bookable with real-time rates, availability, and amenities. It is a significant breakthrough that simplifies AI adoption, improves guest conversion, and positions Rategain as an AI-first innovator. And the launch is aligned with its long-term strategy of building an integrated AI-powered platform backed by sustained investment in product innovation and go-to-market expansion. Also, it is expected to drive higher adoption and retention among hotel partners, deepen its presence in fast-growing regions such as APAC and Middle East, and support its FY26 guidance of 6 to 8 revenue growth with operating margins of 15 to 17%. Now, to dive deeper into the financials and company's future roadmap, let's bring in Deepali. So, Deepali, how is the company performing financially right now?
Thanks, Sajal. Financially, Rategain delivered a strong FY25 revenue, grew 12.5% year-on-year to 1,076.6 crore, compared to 957 crore in FY24, supported by steady traction across quarters despite some sequential volatility. Quarterly revenues peaked at 278.7 crore in Q3 FY25, softened to 260.6 crore in Q4 FY25, and then recovered to 272.9 crore in Q1 FY26, which reflects cyclical patterns in the travel tech sector. Other income rose to 6.6% of revenue in FY25 from 4.2% in FY24, providing an additional boost to earnings. On the profitability front, EBITDA grew to 232 crore in FY25 from 189.7 crore in FY24, with margins improving to 21.5% from 19.8%, benefiting from operating leverage. On the other hand, quarterly margins remain healthy, ranging from 18.2% to 23.2%, with Q4 delivering the highest at 23.2%. Net profit rose sharply to 208.9 crore in FY25 from 145.3 crore in FY24, with net margins strengthening to 18.1% from 14.6%, supported by better cost control and profitability improvement, indicating a strong positioning in travel technology ecosystem. Now, Sejal, given these numbers, what is the company's growth strategy looking like for the future?
That's a great question, Deepali. The company is aiming to become the most dominant player in APAC within the next 1 to 2 years, building on its recent expansion of go-to-market headcount from 15 to 55, which is a move that has already driven 23.2% revenue growth and strong contract wins. Alongside APAC, North America, it is also showing strong momentum, creating dual growth engines across two of the world's largest travel markets. And over the next 2 years, Rategain is targeting double digit organic growth with a longer term aspiration of reaching 20% organic growth, driven by ongoing investment in product innovation and market expansion. So, Dipali, in the end, what kind of conclusion you want to give for the company?
To sum it up, RateGain is positioning itself as a global travel tech leader by combining AI-led innovation with aggressive regional expansion. Its MCP integration offers a clear first-mover advantage, while its strong presence in APAC and growing traction in North America provides multiple growth levers. With profitability on an upward trend and market share gains in sight, the company looks well placed for its next phase of growth.
Well said, Dipali. I think overall RateGain is a company that's harnessing technology to redefine customer experience in travel while also building robust growth engine in key global markets. So if it executes its roadmap as planned, it could firmly establish itself among the top travel technology players worldwide. And now let's move to the second company, Landmark Cars Limited, which is the leading premium automobile retail business in India with dealerships for Mercedes Benz, Honda, Jeep, and Renault. And the company also caters to the commercial vehicle retail business of Ashok Leyland in India. And recently the Landmark expanded its operation by opening a new Mahindra and Mahindra showroom in Hyderabad and extending its Citroën business with Stellantis in Delhi through its existing Jeep manufacturer while closing the depreciated Moti Nagar site. So this expansion comes as the company's new brand portfolio is gaining strong traction. MG, Kia, Mahindra, BYD together they all contributed 19% of the revenues in Q1 FY26 compared to 13% last year. And Mahindra grew 22% year on year and BYD already accounts for 18.7% of revenue. So the move aligns with Landmark's twin strategy of horizontal growth through fast rising premium brands and vertical growth by deepening its presence in selected geographies. With new outlets turning EBITDA positive for the first time this quarter, the Hyderabad and Delhi expansions are expected to lift profitability in FY26 and move the company closer to longer term goal of doubling its market share in India's passenger vehicle market beyond the current 0.5% by volume and 0.5% by value. So, Dipali, how is the company performing financially right now? What do you think?
Thanks, Angel. In FY25, Landmark Cars reported a strong 22.4% year-on-year revenue growth to 4,025.5 crore from 3,287.9 crore in FY24. However, sequential trends were mixed. Revenue peaked at 1,195 crore in Q3 FY25, but moderated in Q4 and Q1 FY26. Despite the top line growth, EBITDA grew only modestly to 234.9 crore in FY25 from 227.2 crore in FY24, and margins fell from 6.9% to 5.8%, reflecting higher operating costs and pressure on dealership profitability. Net profit saw a significant drop, falling to 17.3 crore in FY25 from 57.2 crore in FY24, with net margins contracting sharply to 0.4% from 1.7%. The quarterly net profit trend was volatile, ranging from just 0.3 crore in Q2 FY25 to 11.8 crore in Q3 FY25, underscoring the earnings vulnerability to seasonal demand patterns and cost structures. So, while Landmark delivered a strong revenue growth, the deterioration in profitability highlights ongoing margin compression and cost challenges in the auto dealership segment. Now, Sejal, what's the company's growth strategy looking like from here?
I think Dipali, the company is banking on a rebound in its after sales segment, targeting double digit growth in H2 FY26, consistent with its 13 to 14% CAGR track record. And this will be supported by the ramp up of new Kia and Mahindra workshops, which will add scale to service volumes and margins as well. So, Renault's plan to launch 5 new models in India, including the relaunch of Duster, is also expected to boost brand performance and create additional growth avenues for Landmark. And with the upcoming MG and Kia launches, the company expects stronger volumes and growth, which will aid its long term 2 to 3% PAT margin guidance. And management also noted that margins will benefit from maturing new outlets and a higher after sales contribution currently, which is 9% for new brands and 17% for older brands, and cost efficiencies together drive sustained profitability. So, Dipali, to sum up, give us some conclusion statement.
To sum it up, Landmark Cars is positioning itself to capture growth from new brand partnerships, geographic expansion, and a stronger after sales focus. While profitability has come under pressure due to rising costs and margin compression, the combination of premium brand mix, service network ramp up, and the new model launches provide a clear path to recovery. The key will be balancing aggressive with disciplined cost management to restore earning stability.
Okay, well said, Dipali. I think overall, Landmark Cars is building a diversified premium automotive portfolio while strengthening its service backbone as well. So, if it can execute on its after sales growth and manage cost effectively, it could deliver a meaningful rebound in profitability over the next few years. So, thanks a lot, and that really helped us to understand the direction both these companies are moving in. And now, let's take a quick look at how some of our previous picks have performed. VST Tillers Tractors Limited from 4,575.2 to 5,225, gain of 14.2%. Deep Industries Limited from 500 to 554.7, and that's a gain of 10.9%. Then we have Ceinsys Tech Limited from 1,843 to 1,733.5, which is a decline of 5.9%. Then we have Acuitas Chemicals Limited from 1,177.3 coming to 1,415, and that's a gain of about 20.2%. Tilak Nagar Industries Limited from 480.8 to 479.5, that's a decline of 0.3%. So overall, a pretty good mix of gains, and we'll continue to monitor all these companies closely to see how they shape up in the coming quarters. And here is the QR through which you can access all these previous picks which we covered recently. And now let's move to the summary. So first company, Rategain Travel Technology Limited, has launched the hospitality industry's first model context protocol (MCP) integration for its booking engine, enabling seamless conversational bookings. And Landmark Cars Limited, which has expanded its operation by opening a new Mahindra Mahindra showroom in Hyderabad and extending its Citroën business with Stellantis in Delhi through its existing Jeep infrastructure. So that's it for today's edition of Noisemaker, and if you found this breakout informative, you can scan the QR code to read the full report, and we'll be back soon with more simple and clear market updates. Until then, stay curious, stay ahead, and stay informed.